Once again, we are seeing in the data that home prices are coming down. In fact, here in Phoenix, we're seeing a home price drop of 9%. But is that the full story? We're going to take a look at that information here in a moment. And there are 4 states being called out for having a future home price crash. Does Arizona make the list? We're going to take a look at that. So let's get into it. Welcome back, everyone. Thank you for joining me. So the monthly average sales price per square foot, according to the Cromford Report, is going down. And you don't have to look too far at this graph to see how much this has changed over time. This is just March of this year, okay? From here to there. That is not like years of time. That is just from March until today. And this is the average sales price per square foot monthly. So it's going to be a little bit different than when we're looking at like median sales price. However, this is definitely showing a downward trend, and it is showing that we have seen a decrease of 9% in home prices since March of this year. Now, they talk about this, a decline of 9.2% from $316 a square foot to $287 a square foot over 4 months. It is no doubt keeping current buyers happy and not so welcome news for sellers, for obvious reasons, right? But they do say that half of this decline is caused by high-end homes selling in fewer numbers in July than they did the first half of the year. So one of the things that happens in Arizona, and specifically the Phoenix metro area, is we are fairly seasonal in terms of luxury. So some of those larger luxury homes go off the market in the summertime because we don't have a lot of seasonal visitors who tend to buy those larger, more expensive homes. And the summer is a little bit of a slower season. So oftentimes we don't see a lot of sales in that luxury price point. Therefore, that is affecting our pricing. So for example, we saw 110 closed sales during March that were priced over $3 million, whereas in July, we have so far recorded only 26. So when you take that big chunk of homes over $3 million out of this, we start to see that average go down. Now, obviously, when we're looking at the median, it's going to be a little bit more balanced. It's not as volatile as an average. And so when we look at the median sales price, that peaked at $465,000 in mid-March. It has fallen to $445,000 today, but that's only a drop of 4.3%. So truly, if we are looking at the market and taking out that kind of luxury influence, home prices have come down 4.3% since March. Still not a rosy picture for sellers, but better than 9.2%. Now, the one thing the Cromford Report does say is that given that March is the middle of peak season and July is the middle of summer, this is not an alarming decline, just the normal workings of a buyer's market. So what do you guys think? Is this normal to see, or is this a red flag warning for Phoenix home prices? If we take a look at the monthly median sales price, like I mentioned, it's a little less drastic. Where if we go back to March of 2025, around $460,000, where we stand today, $444,000. These numbers are not exactly what they shared in the commentary, but generally we're seeing the same type of trend here with the monthly median sales price decline since March till today. Now, that's not just a Phoenix situation going on here. U.S. asking prices post smallest increase in nearly 2 years as home sellers adjust to a buyer's market. Now, notice they're not saying home prices are coming down. We're just seeing a slower increase in home prices when we look across the country. And that's because there are some areas of the country that are still seeing home price growth, particularly the East Coast. They're saying the median U.S. asking price is $403,000, up just 2.2% year over year, which is the smallest increase in nearly 2 years. Now, keep in mind, this article is about asking prices, not sales prices. So it's really showing the seller's confidence in being able to push the price to a higher price point than what they've seen in the past, assuming the demand is there, that the sales price will follow that. However, if the area doesn't have that kind of demand, then obviously it doesn't really matter what the asking price is. All that matters is what it actually sells for. So this is indicating that sellers are still pushing price in some areas, but it is slowing down quite a bit as compared to what we've seen in prior years. The article goes on to say that asking prices are losing steam. It's a buyer's market. Sellers are realizing they must price lower to attract buyers. They also say sales price growth is losing steam too, although the median sales price hit a record high during the 4 weeks ending of July 20th. It's up just 1.6% year over year compared to the 5 to 6% growth that we saw most of last year in 2024. Now, they do call out some other good news for buyers. Not only are those prices starting to soften a bit, but median monthly mortgage payment is $26.79, which is the lowest level in nearly 5 months. A lot of this is contributed to mortgage rates. They haven't really gone down too significantly, but they are at the lowest, near the lowest levels of the year so far. So seeing some of the home price softening in combination with mortgage rates not going up, it does create a little bit of a more affordable environment for buyers compared to where we've been over the last year or so. Now, whether you are buying or selling, it may be helpful to understand what the median home price is in the area that you're looking at or living in. If you want that information, check the description below. I have a link where you can request that info for your city specifically. So overall, as you know, we've been seeing a shift towards a buyer's market throughout most of the country, and this is for a number of reasons. First of all, affordability being a little tough, mortgage rates remaining elevated, and inventory has also been increasing, which has increased the competition amongst sellers, which make them start to lower their prices in order to get that buyer demand that isn't super high already, right? So one of the things that we've been tracking, of course, is our inventory, because we've been seeing an increase in inventory this year, and in a healthy way, because we had been very severely undersupplied, not only here in Phoenix, but throughout the country. And now starting to see inventory growth is a healthy thing. And one of those things that Logan Motoshami always tracks, and I always appreciate his perspective on the market because he is very smart and has a lot of great insights. So he's talking about how housing inventory growth is starting to stall. And he's kind of been keying into this for the last month or so as we've seen a bit of a slowdown in housing inventory. Despite the elevated mortgage rates, new listings begin their seasonal decline. We might have already reached our peak percentage growth rate for 2025. Now, Logan Motoshami is always hoping to see us hit at least 80,000 listings on a weekly basis to start to see that change in inventory growth. And he said that we hit that peak in May with a total of 83,143 listings. But it doesn't seem like we have been able to sustain that. We didn't see a few weeks with numbers between 80,000 to 100,000, which would be typical for a peak new listings period. But he says he'll celebrate the victories as they come, especially since we didn't achieve this level at all in 2023 or 2024. So that has been the goal for him to see, and we did hit it, but it hasn't been something we've been seeing consistently. In fact, last week we saw inventory growth slow down. Weekly inventory change in 2025. Inventory rose from 856,000 to 860,000. The same week last year, inventory rose from 668,000 to 677,000. However, inventory is still up 27% year over year. Now, as we've been looking at the active listings in Phoenix, you can see we've started to trend downward for a little bit of time now. It was kind of the end of May, beginning of June, where we saw that first change, leveled off a little bit, went down again, and now it looks like the last 3 weeks we've seen a downward trend on our inventory in Phoenix, sitting around 24,579. So this is affecting our market in the way that supply is now moving closer to demand. We still have a long ways to go to see supply and demand meet, but you'll see in the CMI that I'll show here shortly that the supply numbers have come down quite a bit and demand hasn't moved all that much. So we're getting to a point where supply and demand will be closer to meeting. Whether or not we actually get to a meeting point, that remains to be seen. Now, we've also been looking at the new listings by month continuously throughout the year. If we look back to June, we just barely beat out the previous June with adding new listings to the market. This month in July, we are trending, we're almost at the end of July here, and we are trending pretty far below last July new listings numbers. So my bet is this will be the first month of the year that we don't actually beat the previous year in terms of adding new listings. So definitely seeing a slowdown to those sellers that are willing to come on the market. Some of this could be contributed to the time of year because summer is slower, but some of it might also just be that sellers have heard and seen the message out there that it's not an advantageous time for them to be selling their home. Therefore, if they don't have to, they may just want to wait. Now, sellers might be more inclined to list their homes if buyer demand increases. And one of the things that could increase buyer demand is mortgage rates. We have a loaded week this week with the Fed meeting and jobs reports coming out. So we'll see if anything happens with the Fed. Again, their rate cut does not mean that mortgage rates will be cut. However, it does mean that whatever happens at this Fed meeting, the commentary could impact the economy or the markets, and that could then trickle down into what happens with mortgage rates. So keep an eye out for what changes with rates, and keep in touch with your lender if you are a buyer out there who is in the midst of finding a home and getting quotes on what your monthly mortgage payment would look like. Trump hints at a July rate cut. Fed will do the right thing, is what he says. According to Logan Monoshami, there is no hope for a Fed rate cut this month, but this article is saying that 1 week after reportedly showing Republican members of Congress a draft letter informing Fed Reserve Chair Jerome Powell of his firing, President Donald Trump is now saying that that won't be necessary and there is no pressure on Powell to resign. He does say, "I feel good about it," Trump said. "I just want to see one thing happen. Very simple. Interest rates have to come down." He also says, "I just don't think it's necessary, and I believe that he's going to do the right thing," referring to short-term rate cuts. The two had a very productive talk about rates during their tour, he added. So we'll see what happens with the Fed this week. If they don't cut rates this month, it is likely that they will be doing that in September. That is the anticipated time frame. So keep an eye out for what goes on. According to Mortgage News Daily, starting the week, we had a perfectly flat start to rates, which is good news, but also can be kind of concerning because that means we have the rest of the week to see more volatility if nothing had moved in the beginning of the week. Rates today around 6.81% for a 30-year fixed, went up a little bit from the end of last week, through the end of last week, and where we sit today about 6.81%. So keep an eye on rates if that is something that is important to you. So there are 4 states where they are predicting a housing price crash. Let's see if Arizona makes the list. Before I get there, if any of this is helpful for you, consider subscribing to join our community and get these market updates going forward. According to this Yahoo Finance article, 4 states where home prices are expected to crash in the next 12 months. And of course, I'm looking at this, trying to see if Arizona makes the list. They start out with Florida. Home prices are falling in some cities of Florida. They list out some particular areas that have dropped over 11% in the last few years. Moving on, they are talking about Texas. The Lone Star State is seeing home prices fall, which could represent the beginning stages of a crash. I don't know that I agree with that logic being the one reason why we're going to see home prices crash in that state, but we'll go with it. California is another place. Home prices are slipping, but not by much, down by 0.6% from last year, according to Zillow. Arizona or Phoenix Metro is obviously seeing a bigger change than that. So I'm not sure why California is making this list, but they say home sales in the state are already down 37% from the pandemic peak. It's unclear how far California home sales can fall. Now, that's of course referring specifically to home sales, not necessarily home prices. And then they have North Carolina. It has seen values fall around the state, particularly in cities like Charlotte and Raleigh. In Raleigh, they've seen the downside being an average of 2.2% in the last year. None of these seem super drastic to me. I don't know about you, but all of this information doesn't seem much more drastic than what we're seeing here in Phoenix Metro. So why Arizona isn't making their list, I'm not entirely sure. But if you're in any of those states or considering making a move to those states, there's some info for you. Now let's look at the CMI. We are sitting at 73.6. If you are new here, the Cromford Market Index measures the supply and demand in our market, and 73.6 is considered a buyer's market, anything under 90. Now the demand index is at 75.8, so that's about 25% below normal, and supply, as I was mentioning, has come down quite a bit. It wasn't long ago this number was pushing towards 110, and now we're at 105. 102.9, getting pretty close to 100, which is normal for supply. So while we are still seeing more supply than demand, our supply is coming back down to a normal level, and we're just experiencing a lower level of demand than normal because of affordability and interest rates. So we'll see if supply continues to go down. I think until maybe, my guess is September, maybe October, we may see this increase in supply come back. But as we're going through the end of the summer, I don't think we're going to see a whole lot of new sellers hitting the market. Now, all of this is definitely reflected in these major cities' change in their CMI month over month. Paradise Valley is still going strong. We talked about this last week. Their inventory has come down so much so that this has really created the supply-demand imbalance and making them go further into a seller's market. But we have Chandler has increased by 4% over the last month, largely due to the decrease in inventory in that area. Fountain Hills went in the opposite direction, as did Mesa, Gilbert, Tempe. But we do see a lot of green arrows on here. And if you remember, it wasn't more than probably a month ago where we had all red arrows across the board. Now, the average change in the CMI is actually positive 2.7% month over month. Last week, the change in the CMI was only 0.4%, which was the first positive change we've seen. Every change was a negative change up until then. So the trend has reversed for the last 2 weeks, and I would say a pretty significant change going from 0.4% to 2.7% in just, measuring the month over month change week to week. Now, there are a lot of moving pieces in the market. It can be very hard to know if now is the right time for you to buy or sell. If you have questions around that or your situation in particular and would like to chat with our team, you can set up a discovery call with us for free. Just check the description below and click the link there to schedule. This is a busy week in the economy with the Fed meeting, jobs report, so keep an eye on rates. If you are a buyer out there trying to avoid today's interest rates, keep in mind there is also the option for assumable mortgages, which I've talked about a few times on my channel, but I do have a link in the description for more information on how that works, as well as a list of homes with assumable mortgages. Thanks so much for joining me, you guys, today. I will see you next week on my next market update.